traders that turned into investors because the trade didn't work out. Uh, Today, we have history. And so I thought that it'd be great to make a little history and talk to someone that I knew from my early in my career. I hope that doesn't make you feel too old, Porter. I know you're younger than me, but I'm familiar with your work. I found it compelling. It appealed to my contrarian nature, and it was always controversial. And so your writings continue because you're a founder of MarketWise, One Blade, and there's a free newsletter people could get involved with that I'm going to show the page later in the interview. But welcome. Really an honor to meet you, Porter.
Well, great to be here. And you
Yeah.
guys, apparently, looking at the screen, you guys are trading a lot of currency swaps, which is, boy,
Yeah.
that is a very difficult game.
Yeah, we trade everything. To me, a chart is a chart. The only difference is the symbol and the leverage and beta, but you trade them all the same. So, pattern recognition. But, I want to ask you how you got started. Um, what was your first entry into the industry, and how long ago was that? How many years have you been at this?
Yeah. Well, I graduated from the University of Florida in 1996, and I studied economics, history, and
Yeah,
politics in college. And as you can imagine, I didn't learn
okay,
anything useful.
yeah,
I like to say the only thing I learned in college is a lot of bad habits. But
okay,
But the one thing I did do there was I cemented a lifelong friendship with a fellow named Dr. Steve Sugarud. And Steve was the Doogie Howser, if you recognize that name, of
yeah,
my
I do.
hometown, Winter Park, Florida. He was the smartest kid that ever went to my high school, the smartest kid ever from my part of the world. He graduated from high school when he was 15. He had a master's degree by the time he was 19. He had his PhD by the time he was 22. So by the time I graduated from college, my best friend Steve was already running a very large global mutual fund. And I went to work with Steve and learned global finance and global economics directly by working with him for about 3 years before I started my own company in 1999 called Stansberry Research.
Yes, the name precedes you being here, Porter. Let me ask you a question. How does it feel? Um, and you told me you're a large stockholder, but how does it feel to have someone else really directing the business and your name still being on it?
Well, I don't like it at all. It's been fortunately
I didn't think so.
it's been a very, very tragic situation. And let me just
Yeah,
be really clear about something. Virtually all of the people that still work at Stansberry Research are people that I have hired and mentored and who I respect very, very much. They do outstanding work. If you've ever read David Lashmet's work, if you've ever read Brian Beach's work, if you've ever read Alan Gula's work, they're outstanding at what they do. There's no better technology analyst in the world than David Lashmet. The
yeah,
problems that I've had with that company all relate to the board of directors and the strategic direction of the company. I have really high standards when it comes to ethics and business behavior, and we have not seen eye to eye on many things. So I just don't want to be in business with people, for example, who have received a lifetime ban from the securities industry. That's not
okay,
something that I want to be involved in. Those are not people I want to work with. And
okay,
so these are big corporate issues that unfortunately have nothing to do with the quality of the work or the quality of the people at Stansberry. It's
okay.
just it's just corporate politics. And
You,
as I was saying to you earlier,
all politics. What a segue.
yeah.
Uh, all,
I just generally don't work and play well with others.
yeah. So you're a maverick.
Yes,
And I think a lot of people in this industry are mavericks, and the markets are what attract people to have that type of lifestyle and freedom when they could master something and turn a little something into a lot of something.
that's right. Yeah.
So let's address the elephant in the room, and that's a symbol of the Republicans. You say, and I saw an interview you recently did with Peter St. Ong, I believe the guy's name is,
Mhm.
and
Yep.
um,
Economist at
you
the Heritage Foundation.
Okay, and you said it didn't matter who won. Yet I felt checked your stream this morning, and you seem to be happy about the outcome, even though it doesn't matter who was elected.
Well, I said both things. I said I think it matters a great deal culturally and socially who wins, but
Okay.
I don't think it matters very much to the markets. I think that the die is cast. I don't think that anything can be done to stop the runaway government spending because so much of our government spending is mandatory transfer payments. And I think we're already way past the point where you're going to be able to stop that train, either economically or politically.
Okay,
So I think
so
we're
there's a
approaching.
mountain. There's a mountain out there, and it's debt, and we may be headed for a sovereign bond crisis. If you came in long bonds, it doesn't look great today.
No, and
Um,
that's as you
Go
know,
ahead.
that's the thing I've been warning people about consistently. And when what you can't know is when will the weakness in bonds eventually trigger a correction in the stock market multiple? Because if the 10-year yield is going to be over 5%, stocks trading at 25 times earnings does not make any sense.
Is that where you think the 10 year is going? Have you ever seen a move like this, Porter, where the Fed begins an easing process, goes a half? And I thought, you could have a sell the rumor, buy the fact, and, get a rally back to 4%. But once it got back over 420, it just really accelerated. And you think we're going to five here is
I
by
I
the end
I,
of the
I
year?
actually think we're going to at least 7.
Okay. All right.
Because if you've got 3.5% real economic growth and you've got 3.5% inflation, that gets you to 7%. And the way that I've always understood the bond market is the 10-year yield is a combination of real economic growth plus and rate of inflation. So and by the way, I don't think that I really think that the Fed
Could
has
it also
lost
be
control.
supply? Okay,
Well,
I
of course it
understand.
is, but the reason
Yeah.
why inflation is the rate it is because we have printed so much money over the last 4 years. Look at M1. It's gone from 4 trillion to 20 trillion. We are going to have more inflation, and
Okay.
and and raising rates isn't going to stop it because all the growth in employment and all the growth in GDP is government spending, and no matter what the Fed sets rates at, the government's going to keep spending.
Okay. So this has been going on ad infinitum, right? We could have talked about this 5 years ago. We could have talked
No,
about
no,
this
no, no, no.
10 years ago
No, this is very, very different. The,
after COVID.
everything broke in COVID. We had we had an exceptionally leveraged economy, and we had an oversized government sector going into COVID. But COVID absolutely broke the dam in any kind of orthodox economics. We are into the beginnings of a hyperinflationary scenario, and I do not see a way out of it. I cannot imagine. Give me one concrete example. Right now, Bank of America's losses on their bond portfolio is probably about $150 billion. And as the 10-year yield goes higher, Bank of America's losses are going to mount and mount and mount because they spent $700 billion on COVID bonds in July of 2020. So just ask yourself this question. When there's a run on Bank of America's deposits, which there will be, because Bank of America cannot afford to pay interest to its depositors. So right now it's paying 0.04%. With inflation running at 4%, how long is it before people go, fuck this shit? I'm going to take my money out of a Bank of America and put it into a money market fund where I can at least keep pace with inflation? The answer is not long. When that happens, what's the government going to do? Are they going to allow Bank of America to fail? Are they going to take the
Are there
second?
going to be bail-ins?
There are going to be absolute bailouts. No one will
No,
lose
not
a penny on.
bailouts, bail-ins.
There will not be bail-ins. No one will lose a penny on Bank of America, and the government will print up another $2 trillion to cover all the losses on the COVID bonds, and that will happen during the Trump presidency, which is
Right.
why you will see inflation at 5 or 6 or 7%, and while you see the 10-year yield go to at least 7 or 8%. That will happen, and there's no way to stop it because there's no way to stop the federal spending. Period.
Okay. And President Trump's program seems to be adding another mountain
He's gonna
on top of Mount Everest.
he's gonna spend even more. Now I'm
What?
hopeful. I'm not. I wouldn't say I'm optimistic, but I'm hopeful that Trump at least directs the spending in ways that are beneficial. If the government decides to spend a whole lot on energy infrastructure, for example, it could be very good long term for our economy. But you got to realize we're now spending what 40% of GDP on government, and 80% of that is just transfer payments. We have become a socialist economy. The Wall Street Journal just published a study where they found that in 53% of the counties in the United States, the population is utterly dependent upon federal government disbursements, where 25% or more of the income of the county is from the federal government. That is
Right.
not sustainable. And that is not anything like orthodox economics that you would have known from your study of American finance and economics over the past 50 years. This is a whole different ballgame.
Well, I've been trading almost that long, it feels like. So, you know, if you feel that way about B of A, it would be a great shorting opportunity, wouldn't it?
It is a great short. It's a legendary short. That equity is a zero. And the only reason why it's even trading above $1 right now is because of an illusion on their balance sheet. The rules say they don't have to mark those losses to market because those bonds are held to maturity. Well, maturity is 17 years from now. They're not going to make it.
Okay. So, I mean, all the financials have been strong lately. So, what do you make of today's dollar rally? Is this something that
It's
you would be
absolutely
faded?
this is a Trump rally, and people
Yeah.
expect the dollar to do well because people expect America to get tougher on its trade negotiations, which I hope it will. You know, if you again something that's unsustainable when you're printing this much money and you're buying this many foreign goods and services, your trade balances are awful. And the net balance of foreign ownership of U.S. assets relative to American assets to foreign assets is completely upside down. We're basically selling our country to our foreign creditors more and more every year.
Okay. So, uh, what are you looking for from the Fed tomorrow, Porter? And what's your view of the Fed? Are they too going to go the way of history? In after this, you know, great reset? And would you say what you're talking about is going to be a great reset?
I think we're going to have at least a decade, probably two, of financial repression. And this is not unusual for paper money systems. This is how they work. They rack up unsustainable debts and then they inflate them away. So you're going to have a prolonged period in America where inflation averages 6 or 8% a year and real interest rates are negative for a decade.
Okay, we're going negative on rates. So this is going to be this rally in yields to 5 to 7%. What you're talking about is kind of deflationary, that
No,
we're popping a bubble.
I'm sorry. I think you just misunderstand what I was saying, or I said it incorrectly. The Fed is going to hold short-term rates well below the rate of inflation. So I expect them to cut, and I expect inflation to remain elevated, 4 to 6%, and I expect the
Okay,
Fed funds rate to remain low, 3.5%, and I expect that is the way they will deal with the debt burden. The market set rates, the 10-year yield is going much higher because they're not trying to do away with inflation at all. They are trying to use inflation to default on their obligations because there's no other way to afford them.
okay. So is Trump going to replace Powell?
I don't think he'll do so quickly. Powell's term, I don't believe, ends until 26.
Okay, because it's gone back and forth between them before. There's been that threat.
I really don't think that I don't think that who is in power matters very much, either in the presidency or in the Fed, because there is only one way out for the federal government, and it is to inflate.
Trump has brought up default.
You know what? I wish that we would talk more about default. I
Okay, I think you've written about it.
I have. I would love to see the credit default swaps on American sovereign bonds be priced by the market. That would be
Okay, because
very.
you wrote a book called The American Jubilee.
That's right.
Is that what it's about?
Well, you've
Is
already.
debt
By
forgiveness?
the way, you've already seen the Jubilee happen. Look at what Biden has done. He's given back
Forgiven student debt?
billions and billions of debt. Yes, and also
Okay.
look at the Paytech protection program. That
Oh
wasn't a
yeah.
Jubilee. Come on, we've
Did
already lived through it.
come on, buddy. Didn't you have 100 phantom employees at that time? I mean, the fraud that happened, and you know what? People use that money to go out and buy homes and became flippers and owners of, Airbnbs. So, what's your view on housing when all this is going on? It's one of the most illiquid investments in the world. You need a bank to get involved, and it sounds like the banks are going to be busy with other things.
Yeah, I think you're going to see financial repression. I do not believe that it's likely that America will actually default. I don't believe it's likely that we're going to change our tune and suddenly start favoring the bond market over the stock market. That's not how America works. We're going to inflate, and you're going to see things like Bitcoin and gold and very high quality equity like Coca-Cola and Hershey and Microsoft are going to do very well. The rich are going to keep getting richer and the poor are going to get fucked. That is what's going to happen.
Well, that's always happened.
That's what happens in America.
That's do you see any opportunities? I'm interested in
But
natural
by the way,
gas.
what's silver doing this morning?
It's getting crushed. It's here you go. It's down a buck 30. Um, there's the monthly, but it took out all that major support. Everyone kept trying to buy it at 32.50, and the dollar rally was so strong. It doesn't look good to me.
Yeah.
I'm looking for about 28. And gold doesn't look too good either. So you brought
They've
it
had
up. So
those precious metals complexes have had huge rallies.
they've had huge rallies, and they're going to have a nice correction. I think you could see 2,400 gold. So that's why I want to ask you. During that video, you said that people they had to make certain moves because the election was going to be the catalyst for this crisis. So far it's only day one, and it looks like you know uh, Trump, former President Trump won. So, what did people need to do before the election that they can't do today?
Well, I think the most important thing is just to realize that we're in a new economic era and that Trump is not going to change that. I think it's interesting that silver and gold are correcting. I guess Bitcoin is correcting too on a stronger dollar.
No, let's see. Last I saw, it was still up pretty good. The stock market might has had the most muted response, but Bitcoin's flying.
Wow, that's
It's up
interesting.
5 grand.
I think that's just people think that under Trump it's going to become more embraced probably.
It's liquidity. Okay, the market's up too. The S&Ps are making new all-time highs on this. So, that's one thing. I haven't seen any differentiation between different asset classes. When things go up, everything goes up. Gold,
Yeah.
the market, everything. And when the dollar rallies, most things go down, like today, except for stocks. So, I'd like to see a
I think
time
I
where
think I
gold
think
is up
The
and the
Trump trade
market's down.
the Trump
Yeah.
trade is going to be long stocks and short bonds. And that is going to continue for a long time.
So why would I short B of A? Because that's a
You
special
short B of A
situation.
because you short B of A because it has the single largest portion of those COVID bonds. And I'm
Okay.
saying that I expect the bond market to do very poorly.
Okay. All right. I'm going to be watching B of A. Uh, so
The other
this
the
is
other thing
Rome.
the other thing the other thing that is not predictable is you've got to recognize that there's never been more financial assets in the stock market ever.
Yeah, households own the most they've ever owned in history.
Ever. You
Yep.
also got to recognize that the market itself, the S&P 500, has never been more expensive. And you've got to recognize that that orthodox economics in America's bond market and government spending is broken. So I can't tell you when, but there is going to come a moment where those two things collide. And I would not have anything like full exposure to equity right now.
Well, it
So
should happen in January if there's any precedent that new presidents are always tested, like the '08 crisis was, dumped on Obama, right? So, I think that the sugar high wears off when because the other party will just let it happen now, right? So, um, here we go. By this spring, I think people are going to recognize there's a problem. Do you think we're already in a recession? I mean, you talk about
yes,
dollar
no,
stores
there's no, in my opinion, there's plenty of evidence that the private economy has been in a recession
for a
for
year.
about 6 months, maybe a
Okay.
year, right?
Okay.
But the government spend is just running roughshod over that. All of the new hire is government. All the new spend is government. Private companies are cutting way back. And
Okay.
I don't know if that's going to change, but there are lots of levers that Trump can pull to make the economy stronger. If he launches a huge multi-trillion dollar, multi-year investment in infrastructure, if he does things like allow people which he did when he first took office, to allow everybody to capitalize any capital investment that's made right now. There's lots of things he can do to turn the economy back on. And I think that's why you're seeing the move in the bond market.
Okay. All right. So how are you advising your subscribers to be positioned for what you see coming?
You want to be long very high quality stocks that can manage increasing prices. So my top recommendation today is actually Philip Morris. It's
Okay.
going to do very, very well in a period of economic uncertainty. It's fairly priced, it has great growth, it has great margins, it's a great business. I
Okay. What?
also I also really like property and casualty insurance right now because it's the smart way to play the bond market. They have great active bond managers. They can move up and down the yield curve successfully. And if you invest in the good underwriters, you can always make 12 or 14% a year. And so that combination of really high quality, low volatility blue chip stocks with a big portion of your portfolio in property and casualty insurance is the way to play this. But most of all, what I want you to hear me saying is you've also got to start building cash. I want to see cash in your portfolio at 20%, heading to 30% before the inauguration. You got to be prepared for a massive pullback in equity valuations because
How
it's
much?
happening. I think
Ballpark.
right now stocks are trading at 27 times earnings. Okay.
Okay.
So that multiple could be cut in half and stocks would still be fairly valued. They wouldn't be cheap.
So that would be in S&P 4,000, something like that,
It's
3,000.
it's really hard to say because it also depends what the earnings growth is, right? Like it's a ratio, not a nominal number. So I don't know what the earnings number will be next spring, but I don't think stocks are going to be trading at 20 times that number if you have the 10-year yield above 5%.
Yeah, we're diverging on the daily, we're diverging on the weekly. So we're in this melt up stage. You never know
Yep.
how far a rubber band can stretch, do you, before it snaps?
No, and I try not to play that game. I try to play the game where every year I have more money than when I started. And right
Okay.
now, to me, that is these are just super cautionary signals. It
And
feels great when stocks are going up like this every day, but it is not sustainable.
all right, so you also are telling people to own Bitcoin.
Yes, I've been recommending people buy Bitcoin since 2018.
Okay, and gold and silver,
Absolutely.
physical,
I prefer to own the gold streaming companies, the Franco Nevadas,
they're royalty
the royalty
companies.
firms. Yeah. I'm
Okay.
blanking on the names of them right now,
That's
but
funny because a friend of mine's looking at royalty companies and natural gas because I do think it's going to be the bridge before
I
nuclear.
agree with you. I think that EQT is one of the most important companies in the world, and it is woefully undervalued right now because natural gas prices have been so weak. But as you know, natural gas is the most volatile commodity in the world.
It's your
And
basing, though. I tell you what, Porter. I mean, you know that expression: the longer the base, the
I know
bigger the launch into space.
that's
So,
right. And
yeah,
when Boston runs out of natural gas again, which it will, the price of natural gas is
look
going
at
to
that.
go crazy. It'll it'll go crazy for 3 or 4 months, and
Yeah,
you'll see this stock go from a multiple of 6 or 8 times to you know
so that
25 times.
it's up 14%. A great day to talk about it today.
Yeah, I've been long that stock for it for many years. I think it's one of the best run corporations in America, and I think it's woefully undervalued.
That's why I do these interviews. Is to pick experts' brains like yours, so I could have trading ideas.
Yeah, it's a very well run business.
So let me ask you this: if you think we're Rome and we're burning, do you believe in having um, political diversification? Are you one of those international men who talk about having, multiple passports? And I mean, to quote someone else I've interviewed, Doug Casey, there's a time to get out of Dodge.
Yeah, Doug's been a good friend of mine for over 30 years, and
Yeah,
I respect the hell out of him. He's got a
yeah,
V12 mind. But I've been all over the world, and there isn't any other place I would live but America. I do believe we're the best hope for the world, and I'm not saying that our house is in order, but our quality of life and in general the quality of the services and the infrastructure and the people here are the highest in the world, and I don't see that changing in my lifetime.
wow, what a great way and hopeful message that no matter what, well, people always think, Porter, that the grass is always greener somewhere else, and you've seen lawns all over the world, and America's still the place, even though we're going to have to go through what we have to go through.
Yeah, I agree with Doug very strongly about one thing though, and I don't know how to solve this problem, but it is interesting that the woke mind virus is global and it is incredibly destructive. The underlying idea that you can receive benefits that you don't earn through merit, that you earn through politics, or that your neighbor owes you something. This whole idea is very, very destructive. And I'm hopeful that this new tide of politics in America will banish that idea to other places. That idea does not belong in America. America is the shining city on the hill because we have always believed in merit. And we've got to get back to a government that's way less ideological and way more competent.
No more participation trophies for being on a team.
No more participation trophies for being
Because
on.
I remember how hard I worked to be a champion.
That's right.
And you're right, it instills that type of character into kids that they learn how to fight and survive and do things for themselves because they did as children. So agree with you. And here's hoping to happier days and helping people avoid landmines, Porter. I was great talking to you.
Great. Thanks
Really,
for having me.
yeah.
I hope we all have a great trading month.
Okay, yeah. You're now my trading warrior brother, getting through an interview and me interrupting you all the time. And
I thought it was great.
anyway, good hunting to you guys. And I do want to show that Porter has a free newsletter that you could get right here. And it's at Porter's Daily Journal. And go to it. That's a sign up on it. And he's got a link on his, see him on X. It's at Porter Stands, right?
Yeah, I'm on X. Porter
Yeah.
Stansby.
Okay. All right, Porter. Well, great. I'm glad our paths crossed. It was nice to meet you.
Yep. Thank you very much.
And I feel readier than I did 30 minutes ago.
Well, it was fun looking at all the charts. That's a fun way to go through the day.
All right, Porter. Good hunting, my trading warrior brother.
All right. Bye bye.
Bye. Porter Stansberry, everybody. This will be on YouTube for you to watch 10 times. And that's a wrap. Hope you enjoyed it. Keep an open mind. It'll keep your account open. Adios.